As we head into a new week of new opportunities, it is time to scope out the top charts for this next 7 to 14 days, of which are showing some pretty significant signals amongst the general crowd. With that said, welcome back to EllioTrades channel. I'm your host Krown again today with some good old TA. And we got a fun one today as we look at the top 4 charts that have actually been suggested through the comments on these videos. So I want to encourage you to again let us know what you want to look at in these videos, and well, they might even end up on one of these videos if they are relevant. And of course, I should also let you know that I have my own channel. We do a daily Bitcoin analysis, and the link is in the description below if you so desire to hang out over there in the dark and dirty cave. Anyways, with that in mind, let's waste no time here. I do want to preface first, however, before I get into it, that whenever we're talking about trade setups, we can always talk about, great moon boy-ish targets. And I mean, realistically, in the next couple of weeks here, probably not gonna get like too many moon boy targets to be fair. But more importantly, no trade setup is complete without something representing invalidation, meaning that if some sort of condition is hit, we are no longer looking for the trade setup to be completed. And of course, there's actually, a validation condition as well. I think that one is a little more self-explanatory. So let's jump into it right now with one of the more interesting ones that we've been following up on for the past few weeks here. And this one's really looking like it is coming to fruition. So this is the Ethereum Bitcoin pairing. This one also have implications for the greater market as a whole, because anytime that we have seen this one as generally bullish in an uptrend, on the macro scale, we've essentially seen that the base pairings and, the market by extension is bullish versus the US dollar pairing. So again, right here, we're just looking at Ethereum versus Bitcoin in this case. And we've been going through about a 6-month long consolidation in an ascending triangle format, which is essentially a reaccumulation formation. And again, don't let these words confuse you or scare you. It's just higher lows as buyers are getting more aggressive and sellers are losing or waning within their power as they are not able to push price action down as much with each and every test into the supply zone. Okay, so with that in mind, the 6-month long consolidation right here is actually rather significant, because the longer that you do consolidate, typically speaking, that does imply the result and resolution will be greater. And this is not just coming at a high level right here, but it's also coming at a macro level from our last major breakdown in July of 2018. So completing this formation to the upside, now we're going to talk about validations. Above our weekly level of 7.75 million Satoshis will very likely beget more continuation than our first technical target, which would be at about 9.6 million Satoshis. Now, with that in mind, I should also let you know on the weekly specifically right here, we do see that volatility is incredibly low. So as a mean reverting indicator, we do expect this to explode alongside that consolidation. So just another way of looking at this, the last time that we saw something relatively comparable to this was actually in December of 2020. And you probably already know that that's back on over here, and that essentially led into about a 200% rally. Not bad. Not bad at all, you might say. On top of that, our momentum oscillators, if I can get my red, hey, where's my red arrow? Hey, where'd it go? There it is, found it. We can see that the weekly also has hidden bullish divergence, and the weekly RSI is maintaining its own higher low posture right here as it consolidates around the bullish control zone, a generally good sign. So the probabilities are in favor based off of technical formation, technical target, and momentum oscillators, and volatility in the direction of trend continuation. Now, I should actually go down here to the daily time frame and talk about another condition, by the way, another drive of hidden bullish divergence over here, low volatility, grinding up against the high side of their formation, and a short-term validation of continuation, in this case to the target of 7.75 million Satoshis, would be had on a daily closing high above, actually pretty much exactly where we're at right now. Let's call it above 7.43 million Satoshis. Until then, oscillating between that level and our base at 6.9 million Satoshis is still a bullish setup long term, but until we actually close above, I wouldn't say that it is validated. However, consolidating between this region is going to be good for the BULAs. That brings up an invalidation condition for the short term. And when we're talking about short term, we're talking about, the next week or so. And that would be with any sort of a closure on new lows below 6.9 million Satoshis. If that does happen, it's not game over for the bulls here, but I would be looking for a big move down somewhere around 6.5 million Satoshis. Below there, yes, the greater macro picture does get invalidated. But until then, I do like the setup for the long-term timeframes. We also even have a bullish engulfing going on right here too. I would go as far as to say any sort of a weekly closure today, actually as this video is being recorded on Sunday, above last week's high, we'll complete that formation at 7.37 or so million Satoshis. We'll be looking at minimum for another retest of the 7.75 to 7.9 million Satoshi highs from this consolidation, and then very likely long-term continuation to that topside target right here. And then realistically, because this is going to be a macro breakout, I would be looking for over the next following weeks for it to work its way up to the 1.272 and 1.414 Fibonacci extensions here. Very, very powerful stuff. Okay, we spent a little bit too much time on that one, but that's okay. I want to make these ones a little bit shorter. Yes, there is more to it, obviously, but the setup is as the setup is. Let's get into the next one over here. This one is Zen. This one is Zen versus the dollar. And we have another one right here with our lovely rising bottoms. 1, 2, count them, 3, and we got the same highs right here. You already know where I'm going with this one. Nice and simple, of course. And this one's very close to completing its formation, which will be validated with any sort of a daily closure above 109 and invalidated with any sort of a closure below our current local low at 82.75. With that in mind, we can make a technical target off of the validation of the topside resistance, of which I very strongly believe we're going to test into it right now, or maybe over the next couple days here. And in the next week following that, or 2 weeks, I would be looking for a move back around your May highs, somewhere around about $1.45 or so, which we can mark off right here. Nice and lovely. And that'd actually be pretty much around your prior all-time highs, which is generally a good sign. On top of that, should be known that we do have multiple drives of hidden bullish evidence over here. So momentum oscillators are also bullish. Daily volatility is also trending up here as well. So I am looking for essentially volatility expansion along trend continuation. And for the long term, now we're talking, perhaps a few weeks down the road after the first initial validation condition is met, if we were to put this on a weekly, any sort of a weekly closure higher than that 150, let's call it 151 target, then I would be looking for this one to go for a macro breakout. And we can talk about much more significant targets long term. This would imply moves up towards 170 plus. Of course, it's very far away. It's not relevant towards this particular video. We really want to focus this on in the next couple of weeks to come here. So very close there. Still want to see it validated, but the setup is rather nice. All right, the next one is on something that I've never even remotely heard of before in my life. Before reading a comment on this one, but it's symbol WIN. It's a great name actually for anything really, but it's symbol WIN. I don't know what the base pairing is, to be honest with you. All right, let me actually see. Do I have it over here? It's okay. The real name, crypto's so weird, is Wink Link. It sounds like a scam, but charts looking good over here for what it's worth. And as we all know, scams pump the hardest. Now, look, I don't know if it's an actual scam or not. Probably not. I mean, this is actually fine right here. And we are very close to validating a nice daily breakout out of this almost 6-month-long consolidation as well. See a lot of uniformity around these ones. And that'll be had with any sort of a daily closure above 95.50. My dyslexia perks back up again. And again, what do we have right here? 1, 2, 3, 4, 5, count them, higher lows. Beautiful. And as we approach the macro breakdown area, that is always an area of particular significance. And we do have a nice W bottom right here. And on top of that, hidden bullish evidence on the daily, multiple drives. So we do have an upside bias. Volatility is already expanding. So I am looking for this one to at the very least test around our prior highs of this rally. And on a pound validation of getting above it, a closing above that 95.50-ish region, would be looking for big moves up towards our 1.272. Whoops. 1.272 right here, Fibonacci extension at 12,900 or so, in line with our May and April breakdown regions. Now, long term, do I think that it stops there? I mean, now we're talking, well and far down the road. Well, let's see where this, actually that target is directly in line with the top side of that projected targeted region at 15,500. Okay, interesting. Long term, however, I would be looking for a consolidation after that, and then perhaps the next month or two to follow. Very likely a move back around 19,550 right there. Invalidation on this one is going to be had below our last daily spike low, which is 7,300 in this case. Okay, very easy one right there actually, and probably should draw this one out as well. Something like this basically. You can see that, these are reaccumulation formations, and they're actually a lot of them coming to fruition over the past half year here. So these are rather interesting. And let's get to the last one. Now, this one is probably the least ripe of all of the ones that we looked at today, but it's probably one of the more well-known ones as well. And that is Theta. Theta versus the dollar over here. And again, you'll see a very similar chart formation. And this is very common in markets, right? And what do we have? Well, we have the same thing going on. Low, higher low. And could this be yet another higher low right here? I do believe so. And how do we essentially validate that as likely? Hidden bullish divergence right here. Essentially, RSI momentum oscillator comes further down upon our last low, but price action makes a higher low. So bears are using more force, but getting less of the way, aka bulls essentially gaining momentum. And this is really starting to shape up to be a reaccumulation formation. Now, as you can see, it's not as close to its validation condition at about $8.50 on a daily closure. However, what I actually like about this setup is that it's very close to the invalidation condition, which would be below 570. The reason why I like these sort of setups for my own personal trading, not that I really trade altcoins to be honest with you, but the reason why I like these ones is because if I can enter in very close to where I would actually invalidate my trade, then theoretically my risk with that trade is low compared to a lot of the other ones, which are a lot more ripe, but I would have to kind of eat a potential major loss if they don't actually come to fruition. So that's kind of the give and take there. Now, this is personal preference, so you obviously make the decision for yourself. This is never financial advice. I'm not a financial advisor, but is still of interest here. Anyways, so we got the hidden bullish divergence right there. Daily BBWP, our volatility indicator, is starting to expand off the lows. This is good. But again, not validated until we get above $8.50. From there, I would be looking at a technical target implied somewhere around about $12, which is of significant macro interest, as that is our last major breakdown area from our prior highs. And I imagine that's also going to be confluent with, let's see. Sorry, let me actually get this on a closing basis. There we go. Yes, the 1.618 Fibonacci extension. So again, upon validation of this, which short term, whether I'm bullish or bearish, I do think that this one will trade up at minimum to about 730 to 750 or so. If we do get the continuation above the 850 validation area, then yes, I would be looking for this target to be met over the next following weeks. And then after a bit of a consolidation between there and about $10, I would be looking for potentially a macro breakout confirmed with a weekly closure above 1244. If that happens, then we can talk about the more impressive targets way further back. I won't mention them right now because they are very far away and not relevant towards this conversation, which really needs to be focused on the next couple of weeks to make it tangible and so that you can actually follow up on it. Okay, cool. So we are 13 minutes into this video. Nice and short and sweet. I want to wish you well. And again, I want to encourage you in the comment section to let us know what you want to see in these videos so that we can field some more potential charts that look good, as this was actually rather useful for this particular video. I think I did mention the Bybit link at the beginning of this video. Don't know if it'll actually be in the description or not, to be honest with you. But if it is, I always feel compelled to say, hey, look, unless if you're already successful trading, meaning that you are, an experienced trader. I hate that term, to be honest with you, but meaning that you actually know what you're doing, it's not wise to start off leverage trading. I would certainly not suggest it, as it can be career ending. What I would suggest, if you want to learn trading, is to trade a paper account so that you do not risk any finances in the learning process. However, for the people out there who already have experience, they already know what they're doing, they have a good history of success, then yeah, you can kind of take advantage of something like that. And well, I guess it's just free money. So, fair enough. Kind of hard to turn down, I suppose, as well as it probably does knock off your trading fees and all that good stuff. So fair enough. I'm going to be signing off right there. I want to wish you well, and I'll see you in the next one. Take care.